8th edition is going to happen next month. This Sustainable Chennai Forum have, as I said, many activities, and the Sustainability Speaks talk series we started last year. This is the 13th in the series. We had covered many topics like, transportation, circularity for sustainability, Ramsar sites, sustainable financing and the climate financing, water, ground realities, green hydrogen. Then we had Chennai Climate Action Plan, CO2 captures and mainstreaming circular economy in used water management, many such topics, greening our cities. So we had tried to cover many aspects of sustainability, though I know it's a very tough task. Our Sustainable Chennai Forum itself has 5 pillars. It works towards the water management, waste management, energy, urban greening, and transportation. And our underlying objective is to make a business case for sustainability, being a chamber of commerce. That is our underlying idea. So this type of sustainable talk series gives an overview of many topics, as I read out just now. And today we are here. We have another very, very important topic. We have been hearing about it for long. There had been good understanding. There had not been very good understanding on this topic. The chamber itself had been doing many programs on the SDG goals, corporate responsibilities, responsible business practices, many things over the years. So we thought we plan to do a lot more under the ESG in particular. So we thought this could be an opening session on that, at least to make a general observation and give information on what is this ESG all about. Basically, we know it has different components. So probably what components it has and what it means for the business in particular. Again, being a chamber of commerce, we are quite keen to know on that. So this is the background of today's session. So without further ado, I will introduce both the speakers and welcome them once again. And I request all of you to keep your audio, video on mute other than the speakers and the panelists. So Mr. Pranav is an associate partner in Pricewaterhouse Chartered Accountants LLP, Hyderabad, with over 15 years of experience handling audit engagements involving public and privately held companies in various sectors. He was a part of the capital markets and accounting advisory services, and this gives him unique insight into accounting matters. He focuses on helping clients understand the sustainability reporting. That is again an important thing. Many of the people, and this may require a longer session later on the sustainability reporting alone. So he has specialized in that, and also the process to review engagements under the BRSR, GRI, CSRD, all these things. Maybe you will have to unfold these jargons to lay audience like me. He is an active speaker at various forums and on sustainability related topics. Hearty welcome to Mr. Pranav Vivani. We have the other young speaker, Ms. Shyamala, who is an associate director again in Pricewaterhouse Chartered Accountants LLP, Chennai. She is a Chevening Scholar of the UK government and has 13 years of experience in energy and sustainability domain. She possesses a diverse skill set that includes expertise in sustainability, strategy, ESG frameworks, climate change, and industrial decarbonization. All are being widely talked now. She has knowledge in reporting frameworks again, like such as BRSR, GRI, ISSB, and CSRD, the whole lot. She is proficient with LCA, IS 1404, and all the certification process and the GHG protocols. She has worked with clients in the area of sustainability reporting, assurance, readiness, and so on. Before joining PwC, she was working with Dell for 11 years. So nice to have these two young experts here amidst us. ESG itself is a young concept, probably, at least. So we are happy to have you two as speakers for today. And over to you both. I also welcome Mr. Venkatachalam Iyer, who is our advisor to the Sustainable Chennai Forum, our governing council members like Mr. Dr. Ravi and many others, and the members and all the Sustainable Chennai group interested parties here. So over to you, Pranav.
Thank you, madam. Thank you very much. So it's actually an honor to be here and interacting with all industry experts here, right? So I mean, all the honorable members and respected delegates. So we take this opportunity to present certain items with respect to ESG. What is ESG? What are certain key terms that we keep hearing as a part of ESG? And we spoke about certain acronyms like GRI, BRSR, CSRD. So we'll be looking at what these are broadly, and finally to say why this is important for us to go ahead and make it a part of our daily life, being a part of your strategy of business and everything. So we'll try to cover a bit in the 30-35 minutes that is given to us, and we'll be happy to take questions after that. Yeah, so thank you very much. Shamla, over to you, if you can just present the screen.
Good morning, everyone. We are very excited to be here, as Pranav said, and I would first and foremost I would like to extend my heartfelt thanks to Sharashwati and team from MCCA for giving us this wonderful opportunity, and also huge congratulations on your anniversary. So to kick things off, let's delve into basics. What exactly is ESG? ESG stands for Environmental, Social, and Governance. These are the three central criteria used to measure sustainability and societal impact of a business or an investment. The environmental aspect the environmental aspect covers how well the company performs as a steward of nature, considering factors like energy use, air emissions, waste management, and climate change. The social component examines how well the company maintains its relationship with its stakeholders like employees, customers, suppliers, and community where it operates, and addresses key issues such as human rights, diversity, human capital, and data security, and also material topics such as community engagement, etc. And finally, the governance is the key pillar and pertains to the company's leadership and encompasses the processes, policies, and controls an organization has in place to facilitate the decision making. The various material topics that are covered under governance are board diversity, executive pay, board oversight on ESG related risk management, and stakeholder trust. So, combining all these three pillars together, it gives a comprehensive view of company's performance on the societal impact and environmental impact, and ESG serves as a framework for sustainable business practices. Now, let's look at the evolution of ESG. Even though ESG is perceived to be a niche concept, there are lots of development that had happened over the years, and ESG has evolved as a result of all these developments. Between 1960s and 1970s, EHS, workplace safety and health, has become an integral part of organization due to various EHS laws and safety acts that has been implemented across the globe. And in 1980s, as part of Montreal Protocol, an international treaty has been signed to reduce the ODS, ozone depleting substances, which was hugely successful in protecting the ozone layer. And in 1990s, in Kyoto Protocol warranted all the industrialized countries to reduce the GHG emissions to the targeted levels. This is the first binding agreement under UNFCCC to address the climate change. And in the early 21st century, COP15 at Copenhagen, there are, in addition to the environmental factors, there are various social factors has been considered, like indigenous people rights, equal opportunity, and gender equality. And fast forwarding to 2015, which is a landmark milestone in the climate change mitigation space, which is the Paris Agreement that has been signed by more than 190 countries to reduce the greenhouse gas emissions and also to reach net zero by mid-century in order to reduce the limit the global rise in temperature by well below 2 degrees Celsius above pre-industrial levels, and also to make efforts to keep limit the global rise in temperature below 1.5 degrees Celsius. So when we look at it, as there are so many developments that has been happened over the years, and because of these developments put together, ESG has been evolved parallelly as a framework, which in which multiple stakeholders use to assess the performance of the organization and to evaluate where the business stands at in the sustainability space.
Shamla, I think there is one request on the bottom. Can you just say height on that? Because I think people are not able to see it.
Yeah, sure.
Thank you.
Now let's look at why ESG is becoming more and more important and why business needs to integrate ESG into the practices. ESG is not driven by one specific community but by multiple stakeholders like investors, fund managers, customers, employees, and also regulators. Increasingly, investors are prioritizing investment in companies with better ESG performance and ESG rating, which reduces the risks and also ensures resilience of the organization over longer term. Likewise, there are lots of financial instruments currently in place, like social and climate bonds, sustainable loans and grants, and various other funds that are open and available to the businesses to adopt and also support the sustainable development. There are, as per the recent survey, the millennials and Gen Z are more and more preferring the products and services that are eco-friendly and also incorporating sustainability into their businesses. Finally, incorporating ESG into the business not only enhances the brand reputation but also results in cost efficiency due to operational cost reduction and also improved value. Last but not least, there are lots of regulatory related developments that are happening across the globe, like carbon tax, emission trading systems, and also various rapidly evolving reporting requirements have been implemented across various countries in order to enhance the transparency and streamlining the reporting, which demands ESG is no longer nice to have but became a business mandate.
Yeah, Shamla, if you can just stay on that once, please. So I would like to really bring to the attention of all the members here. Sustainability on one hand is something which is evolving, but somebody might ask a question, right? Why is it important for me? How will it help my business? Look at it this way. There is a lot of capital that is flowing into India with a tag of sustainability. So people, the financial institutions are ready to lend money, lend capital at a lower rates of interest, which will be available if you are working towards sustainability, or if you are in any sector working where you are trying to make sustainable products. That's point number one. Point number two, what happens is, as a part of evolution of this sustainability, that this opens up a huge market. Let us say if one has to talk about something like a hydrogen cell technology or a renewable power technology, new technologies, EVs which are coming in. So this opens a huge landscape of not just a sustainable way of doing things, but also it gives opportunities for everyone to expand their own spectrum from a business standpoint as well, right? So this should not be just considered as a cost or a regulatory compliance, but a broader way of looking at sustainability. It helps the environment make the world better. Also it will help you in building your own brand, building your own work. Yeah, Shamla, thank you.
Thank you, Pranav. So we looked at why ESG is important and how it can positively impact the businesses. But what happens if the companies fail to adopt ESG in their businesses? We are looking at various news in the media that highlights greenwashing, unfair labor practices, child labor, forced labor, etc., which not only affects the reputation of the organization but also impacts the financial performance of the company at a larger extent. For instance, let us take Nike as an example. In one of the upstream supplier of Nike, they are paying wages less than the minimum wage to the laborers, which has been highlighted in the media. This has caused multifold effect, wherein there are regulatory fines and penalties that has been forced on Nike. In addition to that, there are lots of campaigns happen to across the world to boycott the product, which affected the sales of the product and resulted in stock fluctuation and also subject to scrutiny of the investors. So not adopting the ESG can result and affect the performance of a company in a larger extent, and organization pay a hefty price if they fail to adopt ESG at an early stage. So ESG is becoming the more business imperative. In addition to, as Pranav said, incorporating ESG not only contributes positively to environment and the society, but also enhances the financial performance of the organization and reduces the risks that are associated with the ESG.
Madam, can I just come in at this point?
Sure, sir.
Yeah. See, in your first slide, you have just put this ESG into three broad baskets.
Yes.
Right? And considering each one of those ingredients are so unpredictable. So each one of those components, you can't fix it like a mathematics or science like that. They're all unpredictable. How can an industry or a professional can evolve a system of ESG which will suit for a particular situation, which is common, or there is no fit for all sides?
Yes.
Should I take it? Or?
Yes, please.
Yeah. Thank you, sir. That's a very good question. See, the way ESG works is that this list that has been included in the presentation is a very smaller list, right? So here we are only looking at only 15 items across three. But if we look at the whole gamut, ESG has more than 70, 80 sustainable matters which are there. So what we tell our clients also is that whenever you want to take your sustainability journey, there is something called a materiality assessment which you need to do. So as a part of materiality assessment, the items which are important for a company which is in service sector may be different from the items which are important for someone who is in a manufacturing sector. A person who is in pharma, it would be different from a person who is in a steel industry. So first you need to identify what are the items which are impacting my company, and my company is also impacting the outer world. First we need to come across that first 10. These are the top 10 items which I need to look at and I have to deal with. Now there is a broader discussion that has to happen. There is a broader discussion that has to happen with the stakeholders, your management, senior management, and the board of directors to see what is it that I want to achieve. Let us say I say that the company says energy consumption is one of my important sustainable material sustainable matter, and right now your consumption of your energy, there is only 25% renewable energy and 75% non-renewable energy. Now you can take a goal or a commitment saying that, okay, fine, in the next 5 to 10 years, I'll move from this 25% to 65% or 80% of renewable energy, which will eventually decrease the amount of emissions that you are going to make. Like that, for each and every indicator which are important for that particular organization or the company has to be identified first, and then see what am I doing on this, where am I on this, and then see, okay, fine, where is that I want to go. Do I have do I have sufficient capital allocation for it? What is the amount of capital that is required? So all these parameters will have an interplay in determining what are the items that are there important for me and how I want to deal with it. Like you rightly said, there is no one fit for all, but this process is more or less homogeneous for all the companies. So the outcomes might be very different.
In short, every year, every industry should be constantly trying to look at this particular, what do you call this concept of ESG.
Yes, sir. I agree with
on a constant, on a continuous process.
It's a reiterative process. Yes, it is.
Okay, thank you.
Pranav, I have one more question actually. In addition to that, do we have any guidelines or regulations for ESG in India or the world level? Do we have any guidelines or so these are all the areas?
We are covering those aspects in further in our
as a part of the presentation in the further slides. If you can just bear with us for some time, we'll be able to.
I think we can run through the presentation, then we can open up for questions. So some questions may get answered even before. So let us wait for the presentation to get over if you don't mind.
Okay, thank you.
So how businesses can integrate ESG in their operations? ESG is not a one-stop destination, but it is a journey. And broadly categorized, the transformation can be categorized under 3 brackets. One is strategy, implementation, and reporting. The strategy aspect covers the organization, how the organization can align their purpose and also outline their goals and targets in according to their ambitions. And the implementation component covers implementation of policies, setting up governance structure involving various functions and departments, and also imparting trainings and sensitization on with board members, KMPs, and also workforce along with the value chain partners. And finally, implementation of processes and controls to ensure the data reliability and data quality. And the reporting components covers, as like Pranav said, we undertake the materiality assessment to identify the key material topics relevant for the organization. And for those key topics, the organization needs to measure and report how they are performing and what are their current state, which enhances the transparency of the organization, and also it gives a oversight for the company where they are at and where they need to be. And also it serves as a communication between the organization and the stakeholders. Furthermore, assuring these reported metrics adds trust and confidence to the stakeholders. Finally, ESG ratings and accreditations and labeling shows commitment of the organization in the sustainability landscape. So these are the 19 steps overall that are involved in ESG integration. It not be necessary all 19 steps are applicable for an industry. How it depends on industry to industry and case to case basis. There's no one size fits all, as we discussed. We need to look at it and see what are the necessary steps that an organization needs to perform to integrate ESG into their practices. And this is not the exact sequence that needs to be followed. It can start anywhere. For example, it can start in reporting, and based on analyzing where they are at, there can be a lot of there were a lot of initiatives taken to implement targets and goals. So it can start at any point of this roadmap. However, doing all these steps ensure the ESG maturity of an organization, and helps organization to become the leader in the sustainability space. So before moving on to the various ESG framework standards that are available at global and India level, we will look at some terminologies that are widely used in ESG, especially in the environmental pillar. What is global warming, climate change, and net zero, and how they are connected? Global warming is the rise in average Earth's atmospheric temperature due to anthropogenic GHG emissions. Anthropogenic GHG emissions are man-made emissions due to the combustion of fossil fuels, which emits greenhouse gas such as methane, carbon dioxide, and nitrous oxide, which forms the layer in the atmosphere. This layer acts as an insulating blanket, thereby entrapping the sun's infrared rays, causing the rise in atmospheric temperature, and thereby thereby increasing the ocean temperature. And the rise in ocean temperature causes glacier melting, coastal erosion, and floods, so on and so forth. The effect of global warming is catastrophic in nature. The greenhouse gas effect and global warming are the primary drivers for climate change. And climate change refers to long-term shift in weather patterns such as wind precipitation, rising in ocean level, and frequent weather events and natural calamities, etc., which impacts and alters the Earth's climatic systems. This effect impacts this effects causes reduced crop yield, increase in infectious diseases, and also extinction of species, depletion of water resources. And the frequent weather events also creates interruption to the operations, and also disruption in the supply chain, and impacts businesses as well. So the effect of climate change not only affects the natural ecosystem but also the businesses and its operations. So to address these challenges and to mitigate the impact of climate change and to limit the global warming, there are many countries that have set net zero targets in line with the Paris Agreement. What is net zero? Net zero refers to the balancing activity between the amount of greenhouse gas produced and the amount removed from the atmosphere. The first step in net zero is to reduce the emission by integrating energy efficient processes, and then to eliminate the emissions by switching to cleaner alternatives like renewable energy, and finally to offset the residual emissions by creating the carbon sink. So to achieve the net zero target, the organization need to address all three categories of GHG emissions, scope 1, 2, 3. What is scope 1, scope 2, and scope 3? Scope 1 emissions are the direct emissions that happens within the boundary of the organization or under their control. There are activities such as combustion of fossil fuels in boilers, usage of diesel or petrol in cranes and transport vehicles, and use of refrigerants for coolants and air conditioning, and also the process related emissions due to the chemical reaction, all forms part of scope 1 emission. And scope 2 is the indirect emission caused due to the electricity purchased by the organization. And scope 3 comprises all other indirect emissions that happens in both upstream and downstream of the activities. So in scope 3, there are totally 15 categories with 8 categories in the upstream and 7 categories in the downstream. Scope 3 more often forms the greatest share of carbon footprint for any organization and also are the most challenging to address. Over to you, Pranav.
Thank you. So till now we have seen what is ESG and what are the problems that companies may face if the sustainable journey has not been taken, and what is sustainability journey, what are the various steps involved, what are the various scope 1, scope 3 emissions, scope 2, scope 3 emissions, what are the key jargons which we are using. Along with this, one of the key things that we need to understand is that there is a reporting that has to be done for the purpose of ESG. And why does it matter? Why is reporting important? Most of us, we are here today as a part of one or the other organizations, right? In our organizations, on a monthly basis, we get something called MIS, Monthly Information System. Why should we get an MIS? We get MIS to ensure that whatever are the financial transactions, whatever are the transactions that happen during that month, we understand that. Uh, so, sir, can we please mute the questions for some time? We will have time for Q&A. We will take the questions at the same time, please. Thank you. Yeah. So we take these MIS and we review them and we say that, okay, fine, we are performing well or we are not performing well. This is nothing but a form of reporting. So if you want to actually address the concerns which are arising from sustainability, we also need to venture into the arena of ESG reporting. So initially this is considered as an alphabet game. There were so many acronyms which were used: CSRD, GRI, ISSB, SASB, CDP, and all these things. So there are certain global reporting standards which were included. On the first line, if we see on the right side, there is something called GRI, Global Reporting Initiative. This is one of the primary initiatives that were taken for the purpose of reporting on ESG. This was somewhere around 1997. This has been introduced. Since then, people have been using this for the purpose of reporting their performance, their policies, their metrics in the form of one report. So it gives you guidance on how do I measure something, how do I report something. All these things are given as a part of GRI. In the same way, if we come on the left side, there is something called TCFD. So TCFD mainly relates to climate related financial disclosures. So how is climate impacting the company, and how is the company impacting the climate? What is the financial implication? What are the risks which are involved? What are the future transition issues? Like if, let's say, the government comes up with a carbon pricing or a tax for carbon, how will that come into your part of the business strategy? All these things were required by TCFD as a part of the reporting, right? So we can talk about all these reportings maybe at a later stage to give you an insight into how these are working. But today the important point that we need to keep in mind is that now there is something called ISSB, which is integrating all the reporting frameworks into a single place, so that there is one uniform reporting across the world which people can use. So they are taking the inputs from Global Reporting Initiative, which is the GRA. They are taking inputs from TCFD. They are taking inputs from all the other frameworks like CDP. CDP is one more reporting disclosure project which is there, mainly again from a climate standpoint. So they're taking inputs from all these and they're creating standards so as to streamline this reporting framework across the world. Why is streamlining important? Why should we not have so many standards? The reason is, let us say company A is using GRA, company B is using something else, some other reporting. How can I compare both these? Will I have a common platform to compare both these things? So that is becoming the issue at a global level. How do I make a comparative assessment between company A and company B and come out with an answer of, okay, fine, who is doing well, which is leading in the industry? So that is the reason ISSB has taken this project, and they are trying to come up with one single set of standards. If we can use Sharma. So the reporting frameworks which we have seen till now are suo motu in nature. If you want to do your reporting, you will be able to do those reportings based using those frameworks. Now, there are certain mandatory regulations which are there in some of the parts of the world for the purpose of reporting. So first, let's take India. India has introduced basically SEBI, which is the authority for the listed companies. It has introduced a requirement for the listed entities to report on something called business responsibility and sustainability reporting. So this is the acronym which we have used initially, which is BRSR. So in this BRSR, they have given a format and said that okay, you report this data based on the template which I have given you. There are 145 questions. You can go ahead and fill this and include it as a part of your annual report. So this is more like a template which we give our people in the organization to say that, okay, fine, you fill this template and give it to me. We will see what needs to be done, right? So these are not standard essentially. These are the data requirements which SEBI said, okay, fine, listed companies which are in the top 1000 by market capitalization should do a mandatory reporting from the year 23. Now what they said is, once you report, how do I know whether this report is credible or not? What do we do for the financial statements to see whether they are credible or not, whether they are showing a true and fair picture or not? We get it audited. So SEBI said, okay, fine, now the companies are reporting, very good. Now what should be the next logical step? Get them assured. So they've given a roadmap saying that, okay, fine, top 150, you have to get it assured by 2024, 250 by 25, and then they've given a roadmap as such for the top 1000 companies. So first they said, okay, fine, companies who are in the top 1000, you do the reporting, and to ensure that the data which they are including in the report is credible, they said, okay, fine, now let's include one more, which is called the assurance. Now there is a reporting and there is a assurance requirement for the top 1000 listed companies which are in India. So the expectation is that over a period of time, these things will grow, and the scope will include many other companies as well. Along with this, there is one more reporting that SEBI has said that it is mandatory, which is called the value chain reporting. What does it mean? Shamla spoke about the upstream and downstream as a part of scope 3, right? Scope 3, basically, what does it say? It is not directly mine, but it belongs to my vendors, suppliers, and also to the users, customers, transport agents, employees, and all these things, right? So this is the upstream and downstream. So SEBI said that, okay, fine, top 250 companies by market capitalization, please get the data of your vendors and also your customers. They have, of course, given certain thresholds to it and said that you include that data also as a part of your sustainability reporting. So why is this important? Because sometimes what happens is that companies may play around, right? I as a company, I'll not start a plant, I'll outsource it. So the emissions are not sitting directly in my operations, they are there as a part of my supplier. How will I know, right? So that's the reason this concept of value chain reporting is also picking up across the globe. Now there are certain regulations which are there in US as well. SEC means US listed companies were also asked to include certain climate related disclosures. Same is the case with UK. Certain large companies are asked to include data as per TCFD disclosures. So this is for task force for climate related financial disclosures. The same way European Union, they have come up with a really large amount of requirement. They have come up with their own set of standards as well. So all these things, they have said that okay fine, listed companies and companies who are having significant turnover and assets, all these people, they have to start reporting in the Europe. And there is a cascading effect of all these global laws. So because somebody can ask, why should I consider, or why should I know about what is happening in the global scenario? There might be a cascading effect. There might be a company which is a subsidiary of the global company, or you may be supplying to them. If they have value chain reporting, that will also be included, right? So it is important that we should have at least some kind of bird's eye view on what is the global reporting landscape changing like, because at some point somebody is going to ask you as well. Yes, China is also coming up with a reporting system, so they have issued a white paper for consultation. Once that is done, probably that will also come through. Shamla, if you can move forward, please. So we spoke about the BRSR framework, right? So this BRSR framework, I said there are 145 questions. So what they have done is that they have bifurcated these questions into essential questions and leadership questions. What does it mean? Essential questions are mandatory in nature. Irrespective of which industry, what you're doing, what you're not doing, you have to give the data. For example, again, let's take the example of what we have already discussed. In GHG emissions, we said there are three scopes: scope 1, scope 2, and scope 3. So what BRSR says is scope 1 and scope 2 is essential, scope 3 is leadership. So irrespective of what you are doing, you have to measure your scope 1 and scope 2 emissions and disclose it as a part of your essential. And if you are somebody who is a matured organization in the sustainable journey, probably you can start collecting data with respect to scope 3, and also as a leadership, showcasing it's a leader, you are a leader in the industry, you can respond to those leadership questions as well. Like that, these are divided into 9 NGRBC principles, right? So these principles give them an outline of what is getting covered. So essentially, again, if these 9 pillars principles have to be bifurcated, again this will sit in the 3 pillars of environment, social, and governance. So this will include your diversity, this will include the data about your wages, this will include data about your supply chain, this will include data about your governance, your board, product recalls, your cybersecurity incidents, your related party transactions. So everything within this gamut of E, S, and G will be included in these 145 questions. Okay, so right now this is only applicable for companies, again like I said, which are listed and have a market capitalization which is in the top 1000. But we expect that this is going to improve over a period of time. Yeah, let's go, Shama. So this is just to bring into perspective why we are looking at all these things. Anything will be successful only if it comes from the top. At the last COP26 meeting, India has said that we are going to have this Panchamrut of India's climate action, where they said that we are going to achieve net zero. As a country, we are going to achieve net zero by 2070, and we will reach non-fossil energy of 500 gigawatts by 2030, and there will be a reduction of carbon by 45%, and 50% of the energy requirements will be by renewable by 2030. And also they have a reduction of total projected carbon emissions by 1 billion by 2030. Grand these are the grand things which India said that okay fine, we are going to achieve as a part of our India's climate action. Would you mind just giving 1 minute, please? Yeah. So for achieving these things, what they have done is that they have come up with various schemes, right? So there is a carbon credit trading scheme. So there is a national water mission. So if you look at the national water mission, there are huge number of developments which are happening to conserve water. In the same way, there is a Griha Council scheme which is there, which is looking at more and more number of green buildings. So there is a ethanol blending in petrol. The initiative is happening. So all these things are happening at India level to ensure that all the things that they have committed at COP26 are being achieved. So what does it mean for us? So whenever a government is saying that as a country we are going to do that, so it's nothing but us who have to achieve it, right? So there will be a trickle down effect where we will be asked as a organization, every one of us, to see how we can contribute to the achievement of this, right? Like I said at the start, it is not just the cost part of it where you need to worry. This will open up a large amount of opportunities as well for you to achieve in the future. Let's move. Yeah, last but not the least, I would like to leave this thought with you all. See, ESG, okay, fine. What is the logical outcome? First, you did the reporting. Second, you get it audited. Third, there is a rating agency. There are a lot of international rating agencies which are there, which are rating the companies based on their sustainability journey, right? So why is this important? Because more and more, if you remember, initially all the projects or contracts used to get awarded based on your credit rating from somebody like a Crisil or someone. Now companies are awarding the projects not just based on your credit rating, but also on the basis of your ESG ratings. So it's important, right? It becomes as a part of your business strategy that whenever there is an RFP, there are two things that you need to submit. How are you doing on your financial position? How are you doing in your sustainability journey? Both these things can be measured by way of these rating agencies. There are various rating agencies like CDP, S&P Global, MSCI, and Sustainalytics. The difference is the first two, CDP and S&P Global, you need to give the data. Only then you will be rated. But MSCI and Sustainalytics, they take the data which is there in the public domain and they rate you. So it's important that you put out data which is correct, which projects your journey, which is credible. Only then you will be able to get rated well. Yeah, I think this is all we have from our side. In the limited time, we wanted to give an overview of how the ESG landscape is changing. Probably we can open up now for the questions. If somebody have any questions, please you can unmute yourself, and we'll be happy to take the questions and answer as much as possible.
There
Sir,
are
good afternoon, sir. This is Karthik, sir.
Hello, Mr.
Hello,
Karthik.
Mr.
Yes.
Karthik. Yes. Yes, sir. Sir, I want to know what is materiality. Give some examples, sir, for materiality,
So yeah.
materiability in ESG.
Yeah, materiality assessment is the process through which you will identify what are the significant sustainability matters which are important for your company. Mr. Karthik, if I have to ask you a very simple example, let us say I'll give you a service company, okay, who is
Okay.
only dealing in manpower, and I'll give you a company which is manufacturing steel.
Hmm.
For the steel company, what would be the main concern?
Steel company is ultimately is the iron ore is the main concern and raw
So from
material.
an emissions point of view, probably greenhouse gas emissions and carbon
Yeah. Yes.
emissions, right?
Yes. Yes.
But
Yes.
the same will not be applicable for a service company who is in manpower. For them, probably diversity would be a main thing,
Yeah. Now I understand, sir. Yes, sir. Hmm.
right? So that is the concept of materiality.
Okay, sir. Thank you. Thank you.
I think you can stop sharing the screen so that
Green,
there won't be
yeah.
any. Yeah, now it would be clear. And there are already some questions in the chat box. I request Mr. Venkat, if you want to take them and highlight to them, then we can come back to the other questions.
Yeah, basically one question was how is Tamil Nadu state government institutions, how are they working towards sectoral ESG?
So I'm not handy with the data, sir, but there is a lot of work which is happening in coordination with the central government. For all it is, whatever it could be from a political scenario, but from a ESG and sustainability standpoint, there are a lot of things which are happening, like the number of schemes that we have showcased in for the purpose of the Pancharatna. All these are getting trickled into all the state governments as well, and people are taking steps. Even if we look at states like Karnataka, Andhra Pradesh, Telangana, and Tamil Nadu as well, so all the things like Griha Council and all these things have picked up a lot. So this ethanol blending, all these things are picking up a lot, and there is a lot of traction with respect to all these things. So if we look at even the corporates who are there in Tamil Nadu, they are doing some phenomenal jobs.
Okay, then the other
Additionally,
comment.
in Tamil Nadu, there are green hydrogen related, many initiatives has been taken, and offshore wind implementation related, so many progress has been made with in collaboration with the UK and other countries. So when it comes to Tamil Nadu per se, there are lots of initiatives taken by the government, and also individually institutions also taking so many steps towards integrating ESG in their practices.
Yeah, the next one is about raw material assessment is imperative for business or ESG. For example, use of upcycled materials instead of virgin materials. I think more of a comment than a question.
Yeah.
The next
Circular
one
economy
is
certainly critical, and it is also one of the material topic
correct.
when we include under environmental pillar. So it is depending on industry as we discussed, and more incorporating more upcycled materials or sustainability materials definitely reduces the burden of the environment. Yes, that's right.
And what is meant by upstream and downstream emissions?
So upstream emissions are the emissions that happen in the upstream activities of the business operations. For example, for any businesses, there are purchase goods and services, or business travel, employee commute that happens before the service or products is manufactured. So these are the components that are forming part of the upstream emission. And in downstream emission, it is after the product left the organizational boundary, like what is the end of life treatment of the product, what is the use phase emission of this product, and what are the investment related emissions for an organization. All of these activity that is happening after the product or service that is given by the organization forms part of the downstream emission.
Then the next one is until ISSB comes up with standard reporting of what framework BSSR, what framework does BRSR of 1,000 companies following?
Shall I take that?
Covered that, yeah.
Yeah, I mean, we covered it.
So BRSR released more of a prescriptive framework, which gave the format, which gave the clear, clear data points that needs to be reported by the organization. As Pranav mentioned, there are certain questions which are mandatory, and there are a few questions which are voluntary for the organization. And depending on their ESG maturity and data availability, the organization can, our companies can prefer to publish the non-essential indicators, leadership indicators. However, this is more like a standard format that has been released by the SEBI.
Yeah, and of course you answered that. Is there a reporting system in China? I think you answered it while you were talking.
Yeah.
Sector-specific data is not available for many industries and products. Any idea how this can be collected and for comparison for industries in India and the automotive sector?
So at least many industries, if you look at automotive, there are industry leaders who are there in India as well. So there are a lot of companies who are doing well, and the data is available on their website. The data with respect to their emissions, their energy, and something called life cycle emissions, everything they provide as a part of their websites. So if you want to look at any industry, there are market leaders who are there. So it's just a Google search away. I'll not be able to name the companies for whatever reasons it could be. But then if you do a Google search, all these companies are providing, sir, they are doing these sustainability matters and taking steps from at least from the last 10 to 12 years. So they are very matured in their journey. You will be able to find the data, sir.
Yeah, there's one more question. Is there any draft or a rule by government on imposing of carbon tax?
Is it on Indian government or is it like a
Indian
global?
government. Indian government, I think.
Currently, it has not been implemented. However, there are various uh, taxes across the globe. Like, for example, when we take CBAM, which is Carbon Border Adjustment Mechanism that has been implemented in
Yeah.
EU, which warrants organizations to report on their emissions and their many parameters. And based on that, there might be a transfer of pricing based on this carbon tax that has been implemented over there. Even though there are no direct carbon tax that is there in India currently, it can relate to indirect impact because of the taxes across the globe.
Okay, I had one question. In fact, if you look at the three words E, S, and G, they are totally three different aspects of business. I mean, they're not related or connected to each other at all.
Yeah.
Yeah.
And they actually require different levels of different types of expertise. And to add to that, whenever we talk about ESG, most companies are talking about the environment and emissions and those kind of things. Governance is normally covered by the company secretary and various others in your reporting format. Social may not have been covered to that extent, but how has this been clubbed into one this thing
I'll
as
tell you this.
ESG? Yeah.
So when I came into ESG, even I had the same, I mean, exact same question. How are these three coming into picture? Environment, for obvious reasons, it is, sir. But the way things have progressed in the world, because we being in India, probably sometimes we are not aware of how things are happening across the world, like human rights, how they are getting violated, how communities are getting deranged because of the industries that are upcoming. So just because somebody is saying that I want to do something good with energy doesn't mean that you can go ahead and have iron fist on the communities, people, and their kind of life. So the question they asked is, does environment mean, I mean, the whole gamut of business, does it mean only environment, or will I have to look at everybody as a whole so that I can give? So let us say I'm doing everything to better the environment. I'm reducing my emissions, I'm doing circularity, I'm conserving water. But let us say you are not paying well to your employees, you're wiping off the communities. What good is that? So it's the most balanced approach one has to take in order to make it a sustainable journey. So when we talk about sustainability, it's the whole gamut we are talking about. And then the governance piece, very rightly said, sir. Governance is the key pillar, if you ask me. If the company or the organization doesn't have the right kind of governance set to take care of both these things, it is never going to succeed. So the tone at the top is being set by the governance. That is the reason governance has been specifically brought into this whole framework.
Yeah, then throw light on EPR credits and ESG. That's the next question.
So I'm not sure we'll have so much.
So,
What's
when it comes to EPR, now there are so many EPR regulations are coming up on plastics and e-waste, etc., which is integral part for especially for manufacturing and also service industry, which deals with lots of electronic items to incorporate into their business practices. However, it is now under just now it is the laws has been regulated and there are lots of developments happening in the space. So I think we need to have a larger discussions for the EPR credits.
then what is the role? What role do NGOs play in monitoring and reporting of ESG?
So, what role do NGOs play? They play a significant role in helping the communities doing things, but reporting is something which is very private to each company, sir. So they don't really come into one company and say that, hey, you need to report. No, but they can. There are many NGOs who are helping everybody in achieving their targets and everything. That way, they are doing a great service to the communities.
Additionally, NGOs also, raise many community-related impacts of the organization when they are operating, which in turn gives visibility for any organization on what are the key areas where they look at in the community they operate, and also key issues that need to address. So in that aspect, NGO plays a critical role. And there are, in stakeholder engagement, when we involve community through this involvement of NGOs as well, we get some critical inputs to address and to proceed with this materiality assessment and to identify the material issues as well. So in that way, they are helping the organizations in reporting.
So if a company transports material from other plant to other subsidiary company owned locations before sale of the product, is transportation emission to be considered under scope 3 or not?
It's a very specific question, sir. So
Yes,
there are multiple factors which are there. So one, we need to look at who owns the vehicle or who is reimbursing for the petrol that has been consumed. So there are multiple factors. Unless it's a very specific case, it will not be right for us to comment. So, but generally, if I have to give an overarching answer, generally it's a part of your, if it is a part of your own operations and the asset and everything is yours, it's part of scope 1.
Yeah. What is the difference between integrated and reporting and sustainability reporting?
Sustainability reporting is the overall name which has been given, sir. So as a part of it, integrated reporting is one of the frameworks which is used, like GRI, the BRSR we are talking about. In the same way, integrated report is one of the framework which has been developed for the purpose of doing a sustainability reporting.
Okay, how much ESG compliance can be captured through software and other tools?
It all depends on your pocket, sir. So there are tools which are pretty matured in the market, which we can help you capture everything in sustainability. So it depends on how much you want to go. So of course there are a lot of softwares and tools which are available in the market.
So what is value chain reporting?
Again, value chain reporting in a very simple term, reporting of the sustainability matters pertaining to your upstream and downstream.
Okay, in fact, this is a message to me, but I'll just read it out. In scope 3 emissions assurance, how far up or down the supply chain should a corporate undertake audits? What if supplier does not cooperate? Who bears the audit costs?
So it's a very specific question, sir. Who bears the audit cost? I mean, it depends on you how you want to take it. But to what extent you want to go, whether if the supplier is helping or not, it depends on how you look at it, right? Many companies, they have put in something called supplier assessment frameworks. If the supplier is not working towards the same sustainable goals which the companies are not working, they'll be rated less and probably they'll not be purchased from, right? So that supplier assessment assessment has to be done. So based on that, things will move forward.
Okay, sustainability pillars, environment, economy, and social. How economy aspects are accounted in the ESG framework?
I'm not at least clear on the question, sir.
Yeah.
We can ask him to unmute and ask the question, Mr. Professor Kurian Joseph.
Yeah.
I think that question is from Professor Kurian Joseph. Basmati, can you unmute him? Mr. Joseph, if you're there, you can ask the question. Explain.
Yeah, thank you. See, the basic question is, when we talk about sustainability, the three pillars are environment, economy, and the social aspect. But in ESG, the economic component is missing. So why and why that is missing?
Yes, sir. So I would not say as much it is missing, but when we are looking at the businesses and organizations, the company's strategy, business strategy already take care of the concept of economy and financial positions as such. Now, what ESG as a growing thing is saying is that now let's integrate both of this when we are making the decisions. So let's make the business strategy plus sustainability strategy as a part of your whole organization strategy, wherein both the economy and the ESG parts are also taken care of. So that's how I would like to look at it.
And should information and company data security or data breaches be classified under a social requirement or a governance requirement?
I think it's a part of the social
Social
requirement.
requirement.
Yeah.
Yeah. It can be if sensitive data of the organization has been leaked out, and it can impact financially, for example, banks or any other institutions. For them, it can be bracketed and under both classes
Both.
as well. It is not like all these material topics need not be particularly classified as E or S or G. It is these are the material topics that needs to be taken care by the organization and address these issues in order to mitigate risks at a future point of time. So there are data security that happens with respect to the sensitive data of the users, end users as well, that will come under social component. Whereas there are certain data points which if the it gets leaked, it can impact the organizational performance, that will come under governance bracket. So we need to look at differently depending on what we are assessing.
Okay, the next one is whether SDGs have been part of integrated reporting.
Integrated reporting is more like a framework that has been implemented by Value Reporting Foundation, and it also gives flexibility in using various standards like GRA or UN SDGs. We can report the ESG metrics using any of the standards in place. So UN SDGs are not integral to integrated reporting. However, it is possible to combine those and form a final report, prepare a final report.
Okay, data assurance under reporting in BRSR. Can you share some details?
Can it be elaborated?
So
What
not
is expected?
Actually, my question was the data, whatever we are sharing out in the open platform for a company, the assurance of the data or the validity of the data has to be done. This is what I hear. Can you elaborate on this?
So, yeah, please.
Yeah, go ahead, Shamla, please.
So as per the SEBI requirement, there is a reasonable assurance has been mandated in a phased manner for these top 1,000 listed companies. So out of these 145 questions, specifically 9 attributes has been chosen by SEBI, and those 9 attributes are subject, which contains 40 to 45 data points, which are subject to reasonable assurance. When we look at it, these are the data points which are more quantitative in nature and can be comparable between various organizations, and also very crucial when we look at the core indicators comprise minimum what is the wage that has been paid, and also what is the MSME procurement that has been made by the company, and GHG emissions, water consumptions. So all of these specific core attributes has been considered when it came to reasonable assurance. And before the company publishes the report itself, the assurance also needs to be completed. And during the publishing of annual report, it should be assured report needs to be part of that annual report. Does it answer your question, Shekhar?
Yes, sir.
Yes, yeah, to an extent. Thank you.
Yeah, can you please illustrate scope 3 emissions, upstream and downstream emissions in a very simple manner?
Okay, so I think Shyamla already tried to, but I'll just give you a very simple example, sir. Imagine there is a tablet. Okay, the medicine which you take, the tablet, right? Anything which is coming, raw material, labor, employees, everything, services, design, everything, for you to get this tablet manufactured, right, from the top, is called upstream. Now this tablet is going to your customer, it's going down, right? So any emissions that is happening, like transport of this tablet to your warehouse, right, after that, whoever is going to do some marketing and all these things, it is going down to the customer. Any emissions which are happening from manufacture of this tablet going down to the customer, these are downstream emissions. So you just have this mental image: raw material, product, customer, upstream, downstream.
Okay, I think with Saraswati, there's a question for MCCI. How corporate can have support from MCCI on sustainability? What services do you provide?
Okay, maybe we'll have to go for an elaborate thing, but basically that is the idea of our Sustainable Chennai Forum and the work we do through that also. So in fact, this program is a prelude. We are also planning for a continuous education series on this and also help or probably if required handhold the companies which want to go. In fact, I have a question to the speakers here because the MSMEs are a big part and this is a very complex subject. So maybe that is again where probably we will have to educate, and I don't know whether educating by the corporates will itself come as a sort of a ESG component, educating their suppliers and all, because it's otherwise very difficult for them to absorb this topic, practice it. I mean, it's a very challenging thing. I have that one question. The second question I had was, you said there are some, when you talked about the rating, you said some rating happens on its own, pro rating, like, with the, so who will validate those data? I mean, the genuineness of those data and whether that could misrepresent, like, and also whether the NGOs monitoring also has an influence on this rating or NGOs opinions, whatever.
Yeah. So I think the first question is with respect to how can we cater to the needs of MSME. So, ma'am, what is happening is that majority of the larger organizations, they are doing something called supply chain management. So, as a part of their policy, what they'll do is they do classroom trainings for them. They allocate capital to ensure that these people are able to implement sustainable practices. Right, I'll give you a classic example of IKEA. IKEA is known for its circular economy and how they have interacted with their supply chain. They have invested into their entire supply chain and ensured that whatever is the supply chain who is supplying IKEA have become better, are able to incorporate these sustainable practices. Because your question is absolutely right. At an MSME level, probably even that they want to do it, they may not be able to do it. So corporates, at least the larger ones, are trying to get these people on board, giving them trainings, giving them policies, giving them certain amount of direction and capital to say that, okay, fine, this is how we do it. And that is the whole reason the world is going towards value chain reporting, because now the larger organizations are being expected to invest into these MSMEs and bring them up the ladder.
And you also said one report is in the courts, like, one standard report world over. Is it really feasible given the dynamics of each country, the practices? Is it,
there will be a large
ideal?
There will be a large amount of homogeneity that will be brought in, but you're absolutely right, it's impossible. Let's say if there is a US and the EU, which we look at, they always go they don't really work really together, but then still there is a large amount of homogeneity that is being brought in into the reporting. So at least for the reader, they'll know that, okay, fine, this is something which I can compare. It will not be really very different from what A and B are doing.
And Mr. Raghuttamarao, you have something to ask?
I think this is a very good presentation. Thank you. I have one question. I mean, would you know, Mr. Pranav or Madam Shamla, whether any rating agencies actually use double materiality?
Rating agencies don't use
double. None of them, to my knowledge, do.
No. So what is happening, sir? Double materiality is the concept which is evolving from the last 2 years. I think there is an echo. So the CSRD, which is the EU regulation.
Pranav, your voice is echoing.
I know.
Are you on two systems? Oh, my
I know. Are you on two systems? Hello, is it okay now? Yeah, okay. So CSRD, which is the EU regulation, they have started this concept of double materiality, sir. So going forward, we are expecting that more and more of double materiality will be picked up. Like, for example, CDP rating, they are also starting to look at whether double materiality assessment has been done by the companies or not. So I would say it has started now. It is not at a place where everything can be assessed, because double materiality is something which people have started more and more doing now, and it becomes a part of the regulation and people will start taking it up. Right now, it is not so much.
In fact, someone has asked, do we need to have a professional to have ESG professional organization in any organization for just with respect to BRSR rating?
I did not understand this question, sir. Is it there?
Just for preparation of BRSR, any ESG specific professional is required. So
it can be outsourced, I think.
This is, one of the most common questions we encounter when we go for the clients. ESG per se is not like one person expertise. It involves, experts from various functions, and it involves components of social aspects, environmental aspects, as well as governance aspects per se. However, it is very crucial to have a proper governance structure set up and having a sustainability team to monitor, considering the more and more requirement when it comes to reporting or the data requirement to process it, to validate it, to assess the quality of it.
You're muted.
Oh, sorry, I got muted in between. So I don't know where I missed. So even having a considering there are lots of data points in place, and that needs to be reported and also analyzed, and to ensure the quality of it, it is nice to have a dedicated sustainability team in place, and it is very essential to have a sustainability governance in place for any organization.
Can I ask a clarification, Venki?
Yeah, go ahead.
Sorry, Pranav. So the question back to you is, are you actually saying that no rating agency is using double materiality today?
No. So, sir, again, I'm saying double materiality is a concept which is used by the companies to identify their material items. So if that is done by the organization, of course, it will be looked at by the rating agencies. Let us say if I am the company, if I don't do it, rating agency will not be able to look at it. But if you have done it as a company, as a rating agency, it's of course like CDP and all, they are looking at it.
Okay, thank you.
Yeah, just a couple of more questions on due to the new knowledge that are needed to report ESG. What percentage of voluntary data is towards green shades washing? Any idea? That's very difficult to answer.
Not possible, sir. I'll not be able to answer. I'm sorry about it.
Yeah, I think more or less we've covered most of the questions.
I think yes, we have come almost to the end of this sessions. I leave it to Mr. Venkat to conclude with his remarks.
Yeah. First of all, I must compliment both of you for covering this topic in detail, which has been a kind of a gray area for most of us, and everybody has been wanting to know about ESG. And at the end of the session, I can see requests for MCCI to conduct workshops on ESG. So that's how good the session has been, really. So thanks to Pranav and Shamla for just taking us through the very basics and enlightening us on this particular aspect of ESG, which has been the buzzword for most organizations over the last few years. And I think we'll continue to have so many more and more sessions as part of the Sustainable Chennai Forum, which was, as Madam Saraswati said, it was born on 9/11, which is basically an emergency number. And I think it's an emergency situation for most of the world that we all adopt not just environment, but sustainability goals and towards governance also. So thank you, Pranav and Shamla, for a wonderful insight and a very good in-depth insight into ESG itself. Thanks a lot.
Thank you very much, sir. Thank you very much, ma'am. So we'll be happy to be of help anytime. You just let us know based on the availability. We'll be able to do it. And ma'am, so whenever probably I'm in Chennai, I would really love to come and meet your organization and have a probably face-to-face chat.
Sure.
Thank you very much for the opportunity.
Yeah, thanks everyone for joining. Have a wonderful weekend, all of you.
Thank you.
Thank you.
Thank you. Thank you all.
Thank you, sir.
Thank you, MCCI.
Thank you all.
Thank you all.